Yo, what's up, traders? It's late night here. We're here in the office working on new training for an institutional style of trading. It's super popular. There's a lot of people talking about it and looking at these different methods. And so we are redoing it a bit in the Ronin Forex way. I'm presenting it in a super easy way to understand it and how you can apply my previous strategies that I teach in the VIP Academy and apply this to institutional trading approach. So stay on the lookout for that. It's going to be sick. It's going to be awesome. And we're going over that today with the accelerator group. And we're looking at some of these setups here on particularly GBPUSD that I'm looking at right now. And you can see there's a lot of stuff going on in this chart, right? We see this huge move to the upside, big rally, breakdown. Looks like we have an inverted head and shoulders here, which could be a bit deceiving. You know, a lot of people are like, oh man, here we go. We broken this resistance here. We're going to break out. But you can see prices become pretty capped right here on GBPUSD. I'm not saying that it's not going to, but I'm personally at the time short on this pair, and there's multiple different reasons. But, you know, saying that there's an inverted head and shoulders here just seems too easy, right? It's too easy of a play. Here's another structure. This could be a bullish flag. But in this video, I want to talk about Fibonacci's and how to use them for the pound. So especially with GBPUSD, I don't know what it is about this 78.6% retracement. This is a big deal with these pairs typically. We can go over to the left here. We see there's a break in the market and a big spike higher, which brings us down to this low. From this high to low, here you can see we just capped off the 78.6% retracement and are respecting that level super strongly. So my personal bias is, okay, so now where can I look for shorts here? Because I think we're going to see some movement to the downside. And usually when I make that type of hypothesis and judgment, the two next questions are, how much do I want to risk on this? So what am I willing to lose? And what will be the gain that I would make in this play? And so remember, we're looking at using our Fibonacci's here. I'm going to look from this low here to the high to see how much of a move to the downside we would be looking at. So I have some of my targets here. That would be my target just looking at the price action. And then from the low to the high and right on this magic number, 78.6, you know, and this is, you can see this looks like a very legitimate downside target. Of course, you know, it's 300 pips away, so it's not going to happen overnight, but it is the cable, right? This thing could drop if we get, you know, one negative Brexit headline or some significant dollar strength, which I think seems pretty likely given everything going on. And we have our Fibonacci levels to back that up. So we're starting to get a clear picture of what our targets are going to be and why we're going to get there. So using the Fibonacci's for that, I think is probably the most effective way to use them. So hope you found this quick video helpful. If you're interested in learning more of my strategies from beginner, intermediate to advanced, all the way up to having me mentor you and help you to get funded and become a full-time trader, click the links below to get started, and I'll see you in our groups. Peace.